over the past 4 months, the price of natural gas has basically doubled from just over $2 in late October to more than $4 today. Highest level, by the way, since the end of 2022. Now, some of that's because we had a lot of cold weather. Some of it's we're rampant liquefied natural gas exports. Plenty of it comes from utilities that desperately need to generate more electricity for the data centers in particular. That's translated to some big gains for the natural gas producers, including EQT, one of the largest producers in America, with a stock that's climbed from the mid-30s in early November to 50 and change as of today. Now, earlier this week, EQT reported stronger quarter. I mean, really better than expected production, earnings, cash flow results, and issued a solid year forecast. I got to tell you, I mean, these guys are really, really getting it right. And that's why the stock rallied a bit on Wednesday. All right, so I spent the last couple of sessions getting clobbered like everything else. But a lot of people are starting to wonder what will happen to the natural gas producers once we get past the winter and the Trump administration's pro-production policies start to push prices down, perhaps. So let's take a closer look with Toby Rice, the president and CEO of EQT Corp, to learn more. Mr. Rice, welcome back to Mad Money.
Hey, Jim, how you doing?
All right, so, Toby, I want to start first a little historical. You are a growth company that happens to be in the natural gas business. I want people to understand that because a lot of your compadres are running in place. That's not what you've been doing.
Yeah, there's a lot of momentum behind EQT. And, Jim, you know, the tough part is we are a high-growth business without growing production. We've been doing this in maintenance mode. And the key to the success has been an intense focus on increasing our margins. We've done that by lowering our cost curves. And Jim, over the last 5 years, since we took over, we have seen our productivity capacity increase 50% through acquisitions. We've seen our cost structure come down by over 30%. And the most important metric of all, our free cash flow per share has doubled over that last 5 years. We're just getting started. We're really excited about this setup and to continue the growth momentum and producing a high-quality business for our stakeholders.
That's extraordinary, given the fact that most natural gas companies have been trying to keep their free cash flow even over the years. That's about best they can do. Now, one of the reasons that is, and I think it's really interesting when you look back at people's conference calls, you were incredibly bullish about natural gas going in the year. Nobody else was. You get that stuff right. I know it's hard because you're predicting one of the toughest commodities in the world, but you sure nailed it.
Yeah, you know, natural gas is one of the more volatile commodities, and part of the reason why is because we've crippled our ability to get infrastructure built in this country. What that means is market forces are pinched and they're not allowed to flow freely. That causes volatility. Our inability to get infrastructure built, lack of storage, further exacerbates the problem. Then you throw in weather, and that's a whole nother ballgame. You know, coming into this winter, I think it started off pretty mild, but very quickly we've seen much colder weather, and that has caused gas prices to go in November for 2025 from about $3 to now today over $4.20. Now, one thing people need to keep in mind when you step back and you look at this weather, this is only a 4% colder winter than normal. So this is not a major move. And for people to look at these prices of $4.25 for 25, Jim, keep in mind, this is still the most affordable energy source on the planet. $4.25 natural gas is the equivalent of a $25 barrel of oil. So this is one of the challenging things about natural gas, and the great things about natural gas is the affordability of the product we sell.
Well, but the affordability stems from people like you who understood there's a ton of natural gas in the Marcellus, an area that a lot of people had written off even 10 years ago. But you had the foresight to be able to grow and grow and grow in that area. It has paid off big for you.
Yeah, but it's important to know we are in a new era of energy development here in this country. Thank goodness for the shale revolution that took place, that transformed America from being energy dependent to being an energy powerhouse on the world stage. And Jim, we have never produced more energy than we're doing right now in this country. If you added up the oil and gas production in America, thanks to the shale revolution, thanks to the wildcats and the roughnecks, we are producing over 30 million barrels a day of energy equivalent. Now, here's the challenging part, Jim. People are scratching their heads because despite this record production, energy bills for American consumers are up over 35%. How does that happen? It's because political forces have overwhelmed market forces, and the simple solution is getting back to letting market forces work, and that means getting pipelines and energy infrastructure built, something we think is going to take place and allow us to connect to what is a really amazing demand setup for natural gas, whether you're talking about the continued momentum of evolving the energy sources we use, replacing coal with natural gas, or you talk about LNG providing security to our allies and lowering global emissions in the process, or we could talk about the AI boom that's taking place. We've got major catalysts that are going to show between a 20 to 40% demand growth for natural gas in this country. It's a really exciting story, and EQT, as America's natural gas champion, is at the center of it.
All right, now, and speaking of being the center of it, there's a fantastic deck that you did, page 18. Data center demand becoming the cornerstone to natural gas bull case. I thought they wanted to do it all with solar and wind here. What's the matter, Toby?
Man, Jim, I don't know what happened over the last couple months, but there's certainly been a renewed interest in the intensity for the appetite for this power to meet this demand. We think one of this stems for the fact that people have been looking across all options, and they're looking for the best energy possible. That means the most affordable, the most reliable, and the cleanest form of energy. And it took some time, but we firmly believe that natural gas is going to take the lion's share of power demand to meet this growing AI demand need. And people need to understand, this is not just a luxury item. This is not just going to make our apps better. This is absolutely critical that America wins the AI race. And thanks to companies like EQT, we're going to make sure that our tech companies get all the energy they need to meet their demand.
Well, I think everyone knows I've been pro oil and gas for 20 years, in part because the industry itself is far more responsible. People don't realize that. You have been a remarkable steward. There are pages where you indicate that you were the first to net zero, but I want to go back to the government anyway. It is very clear to me that the first thing that President Trump did was to get rid of that ridiculous pause that put so many projects on hold, big projects that employed tens of thousands of people. The largest construction projects in America were all put on hold by one quick pause button in January 24. That's all gone now, right? I mean, you're free to trade, so to speak.
Yes, I think this administration is making it very clear that we are going to get back to letting market forces work, let market forces move the cheapest, most reliable, cleanest energy to the customers. We've seen the lift on the LNG pause. We've seen the push for more pipelines to get built to New England, which would be great. And Jim, it's about time, because it's never been more, we've never produced more, but it's never been harder to do what we do in this country. And people have heard energy executives say how difficult it is to get energy projects built. I get it. You guys have been hearing us say that for the last 15, 20 years. And we sort of get labeled as the boy who cries wolf. Well, Jim, what people need to understand is this pipeline cancellation movement that's taken place in this country is the first time that environmentalists have actually effectively shut down our ability to get energy to the places where they're sourced, to where they're needed. And that means after 8 years of this, Jim, the wolf is here. Our pipelines are maxed out. We need to get back to getting energy infrastructure built. We need to unleash American energy, build, baby, build. And thank goodness this administration will let this happen. And it could not happen at a more critical time in the face of this AI boom that's taking place. You know, our grid is very fragile, as people have talked about. And some people are saying that this AI demand surge is going to be the straw that breaks the camel's back. If you ask me, this is going to be the log that breaks the camel's back. So we have got to get back to getting things built in this country and take our energy security and the affordability of this energy incredibly serious.
Well, you're a great spokesperson for the industry. And again, I want to just make sure people understand. Page 23, first traditional energy company of scale to reach net zero. He did say pipe, baby, pipe, so to speak, but you have never, ever gone against the wishes of the environmentalists. You've done everything you can to be as clean as you can, and I'm proud of you for doing that. It matters.
Absolutely. And we are going to be the operator of choice for all stakeholders, and that means we're going to produce the cleanest energy possible. And Jim, our commitment to environmental excellence is unwavering. We're going to continue to produce the cleanest energy on the planet. We're going to continue to find ways to lower the carbon footprint of our energy ecosystems. And addressing methane emissions was a big tool for us to do that. But Jim, why we did that is because we cannot let the carbon footprint associated with making our product overshadow the emission reduction benefits when people use our product.
Right.
And just to give your listeners an example here, our carbon footprint at EQT, it's about 400,000 tons per year. That's what it takes for us to run our rigs, run our frac crews, take care of the wells. And some people are saying we should stop natural gas development because of that 400,000 ton carbon footprint. But step back and understand this. Those operations and that carbon footprint is going to produce an amount of natural gas when put on the world stage to replace coal, for example. It will have a decarbonizing impact of over 150 million tons.
Okay.
So a few 100,000 ton cost for 150 million ton benefit. This is the greatest deal in climate, and it's time that our industry starts stepping up and showing the world that these type of solutions exist, and we want to bring them to the world.
Amen. Thank you for coming on and saying it, because that's probably the most important that you said about all the different things, because everybody wins with natural gas. Everybody. That's Toby Rice, President and CEO of EQT. What a company. Thank you, Toby. Great to see you.
Thanks, Jim.
Mad Money's back after the break.
Coming up, is everything bigger in Texas? Cramer's catching up with the CEO of Texas Roadhouse after the company's earnings report. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.